Policy and Funding Development at the Region of Peel. And I want to start off by thank you for attending today's session. I know this is a busy time of year, so we really appreciate you spending or dedicating about an hour and a half of your busy week to being with us today to listen to a couple of updates. So thank you so much. And as you know, this is the kind of thing that happens towards the end of the year. We spend a lot of time kind of reflecting and thinking about, what the year that passed and the year that's coming. So I did want to use this opportunity to thank everybody, to acknowledge all your hard work in the operation of your LHCC agencies across Peel, and for some of you also in other jurisdictions, the work you've done with your home providers to ensure that they can offer services to children in Peel. And really your commitment really makes a difference to ensure that there is licensed childcare options out there for the community. So thank you so much for that. The other thing is that I know that this year, there was definitely it's a year of transition. And so, and in that transition, we learned quite a bit, and we're going to be taking some of those key learnings into 2026 and continuing to collaborate with you and learn together. So again, just wanted to thank you for your partnership and your commitment as we kind of get started. So okay, so without further ado, we are going to talk about your CWELCC guidelines. So you would have received your the guidelines in via email, and we know it's a lot of information, but we just want to highlight that taking the time to review the guidelines and all the associated resources is really essential. It ensures that you're well prepared for the year, that you're compliant, that there's not really any surprises with any of the either new requirements or sometimes old requirements. And as always, if you have any questions at all, please don't hesitate to reach out to your early years specialist. They're there to support you. On today's call, we're going to highlight some of the key updates and some critical next steps. And we're also going to help share some of the resources that were developed just to help you kind of implement and transition into the 2026 year. But again, these teleconferences are meant to be a complement to the guideline. They don't replace the guideline. We don't go into all the details. We're just kind of highlighting some critical things. So your guideline does remain your kind of critical point of contact or reference document. So before we begin, I'm going to just dive into a few of the housekeeping items. So first is we are continuing to use the Teams Q&A feature on the teleconference to help us identify questions. So on the top of your screen, you should see a Q&A button, like the one that's there. So if you want to ask a question, you could do so by clicking that button and then posting your question in that little ask a question section. If you happen to see a question that you also have that somebody else posted, you can upvote it or you can thumbs up it, just so we have a sense of, oh, this is a common question. We want to make sure that we have a Q&A or we have very clear language on this particular question because it's coming up more and more. So that is helpful. So thank you so much for that. Also, you can raise your hand. So the other icon there is, like you see it, it's kind of like two icons over that raise feature. You raise your hand and then eventually we will get to your hand, and then you can just take yourself off mute and you can ask your questions verbally. Either work. And then again, last but not least, if we don't get to your question or you don't want to ask it as part of the teleconference, your EYS is your third option, and the early years division mailbox is another option for you as well. So now just a few minor housekeeping items. So again, as normal, this session's being recorded. So by staying on the session, you're agreeing for you to be recorded. Your microphone's going to be muted unless you're called upon during the Q&A session. There is going to be that Q&A session at the end of the teleconference today. So we'll kind of go through quickly the agenda so you can kind of see what to expect there. So we're going to, like I said, start off with the key updates and guideline changes, funding changes related to 2026. Then we're going to talk about the workforce compensation funding changes. There no changes to the program. However, like the last couple of years, the ceilings have increased, the annual amounts have increased. So we're going to be walking you through that. Then we're going to do a demonstration of the staff wages planning tool, similar to the tool that we had last year. It's been updated to reflect the new and updated ceiling numbers. Then we're going to talk about the funding rollout and then get into next steps. And then at the end, we'll have some time for Q&A. Okay, so with that, I am going to get started. So the CWELCC updates and their guidelines are effective January 1st, and they'll kind of take us through all of the 2026 year. Then you would have received, we received communications from EDU in about mid-December. Mid-November. And then we've taken a bit of time to review those documents and make some necessary changes to the guideline. So because we sent an email and there was quite a bit of attachments, right? So yesterday you would have received an email with multiple attachments. We just wanted to take a minute to go through what we sent you. So you would have received quite a few things. You would have received the LHCC CWELCC funding guideline. You also would have received the funding guideline for our workforce funding. And for those of you who support and serve children, school-age children, or before and after school program at some of the homes in your agency, also there's a before and after school guidelines, right? So those are 2 documents. The third one is our service provider handbook. That handbook goes for both center-based and LHCC. That handbook's been updated as well this year. You also received a planning tool. So like we're going to do the demo today, but the actual Excel tool you've received as well as the LHCC, the 2025 operating budget tool. So that budget tool would have been from 2025. We are going to be updating a tool in 2026, and you'll get that in Q1. So what you received is the one from last year. We've just resent it just so you have something to get started, to start the new year with. In addition, so there are communication requirements outlined in the guideline. They're very similar to last year. There's a memo to families regarding the fees, memos to existing staff about the changes in workforce. If you need one, there are memos to any RACE staff who've joined, right, regarding, again, the workforce funding that's available to them. And also a memo related to planning time and professional learning. So all of these memos are appendices in the guideline. However, to help you just send them out through your normal communication mechanisms, we also sent them as separate attachments in the email. So that's why it looks like, oh my God, why does this email have 10 attachments to it? Because we did separate the memos, so the last 4 bullets there for you to just help you to distribute them like by the required dates. We have also, for those of you who have French-speaking staff or French-speaking families, or there's also, the memos have also been translated into French as well. So that's why there's a couple of extra documents there just for your ease of use. Okay, let's jump into what's new for 2026. So fees did not change. So essentially, and we'll get into what your fee should be in the next slide, but there's no significant changes in 2026 related to fee structure. It's more or less a continuation of what what you're charging today. And that is what is outlined in that memo, just to be crystal clear with families, because they might have heard of, there was the original March timeline about going to $10 a day. That is not the province is not moving forward with that at this time. So it's just kind of setting expectations with your family. So that's what that memo will help out with. We're going to talk about the program allocation benchmarks. We'll get into that in a bit more detail, but they have been updated to reflect, I'm very pleased to say, some feedback from service system managers, updated, and from you, to be honest, feedback that we've heard from many of you related to some of the benchmarks. And increase in inflation. So you'll see we're going to provide you with more details then. Like I said, update ceiling, workforce compensation funding, and also the other key change that you'll see in 2026 is this last piece. It's called the updated specific date for agencies. So for those of you who operate in multiple jurisdictions, right, there is the overseen or the primary service system manager. That is based on wherever your head office address is. Then you have your secondary service system manager. So if you are, let's say your home office is in York region, but you've got homes in Peel region, then Peel is your secondary and York would be your primary, your overseeing. So what the ministry is doing is that each year they're moving or integrating more of the funding in the homes from the secondary into the overseeing. And I think that they're doing that to kind of help streamline, some of the reporting and the funding. So how you are, and we've reached out to agencies and who are impacted, right? So that's going to shift. The difference isn't really how much you should be receiving, but it's who you are getting it from that is going to change a little bit. And this only impacts providers who work in multiple jurisdictions. I'm going to pause of it there. So that I'd say the rest of the changes are kind of things that are known. We'll focus on the benchmarks and then we'll talk more about that date, right? And how that's going to impact your funding for 2026 and also your reporting requirements for 2026. Okay, let's get into the fees. So thank you. So in terms of what you're going to charge your families, like I said, no real changes from this year. If you want more details, there are the details of this are outlined in section 4.2 of the guideline. So fees must continue to be the lesser of $22 a day or your CWELCC reduced fee that you were charging on December 31st, 2024. So potentially for some of you, it's possible that when the fee reduction was the 52.75%, that 52.75% was less than $22. So you're maintaining that lower number. And but for the majority, it is more or less $22 a day. If you join CWELCC as an LHCC agency, right, you must set your fees based on the regulations, which are outlined there. So it is $22 a day for infants, toddlers, preschool, or if they're doing any family grouping, and $19.28 a day for full day kindergarten. So that means, like, let's say you're watching a kindergarten age child on a PA day, then you're set at the $19.28 a day. For if you're new as well and you're offering kindergarten, either like before school, which is the AM, after school, which is the PM, or before and after, then that is capped for $14.88 a day. So this is for any agencies who have joined the CWELCC program after December 31st, 2024. That's what the regulations say you need to set your fees at. Okay, so now let's get into some of the funding updates. So we're going to see in January 1st, it's essentially a rollover of your existing allocation, your current CWELCC funding. Right, this would include any legacy or top-up amounts as applicable to each agency. If you added new homes in 2025, What we did is we looked at the median number of service days for your agency, right? Because let's see, because depending on when you added those homes, they wouldn't reflect the 12-month or period. So in order to get a 12-month period, we looked at the median number of service days for your agency, and that is what we used as the starting point to reflect your service days for that home. When we go out and collect data related to service days, you'll be able to write the precise number of service days for each of your home through that update task. And then we'll be looking to that for that data and making updates. But just as a starting point to make sure you had enough funding, we did just look at the median number for January. In April, there'll be an update where we're going to be updating all of the benchmarks for 2026. We're going to be looking at your operating data that you are just kind of reporting in Q4. And the base fee revenue, again, we're going to be looking at, we're going to be collecting that more regularly from you as well as part of the update task. So I don't know if my power just went out, but I think I'm okay. So sorry, my screen was loud there. So I'm just gonna unplug my monitor and see if that helps. Sorry, everyone. Just checking. Folks hear me, or did I lose connection?
We can still hear you, Olivia. Would you like me to take over?
I think I'm okay, but if I lose connection, yes, please jump in, Amanda. Thank you.
Will do.
Okay, thank you. Appreciate it. Okay, so where was I? We're talking about April. So, oh yes, and we're talking about updating data. So there's going to be, we're going to be collecting and like through our update tasks, data from you on a quarterly basis. So in addition to some of the, the service dates for your homes and the start and end date for your homes, we're also going to be looking at your base revenue offset projections, right? It is as you know, as families leave enjoying your homes at different points in time, it is a little challenging for us to forecast what that's going to be. So last quarter, we asked you to provide us with your forecast, and then we updated the application as soon as we could based on when we received the data. For 2026, instead of just doing that at the end of the year, we're going to be doing that a bit more regularly, so it doesn't kind of become like year-end surprise, right? So we are going to be asking you to share your base revenue projections with us, and we're going to be updating your allocations based on kind of where you're at with your specific agency's enrollment. And then going back to some of the key changes. So if you had a home if Peel is your secondary service system manager, and you open a home in Peel between January 1st and December 31st, 2024, all of the funding associated with that home will be fully transitioned to your overseeing service system managers. We will be communicating to impacted agencies directly about the number of homes, and we are working with our neighboring municipalities to kind of smooth out this transition so that you don't stop getting funding from us before you start getting funding from them. We're trying to make it seamless for all agencies. So we've been working alongside the different municipalities that are involved with Peel related to this one. All of this transition will be completed by April. If not sooner, it really depends municipality by municipality. Okay. So, and we're going to be, the other piece too is we're going to be sharing a bit more information about also the rolling top up with you in Q1 as well. So now let's talk a little bit about the updated benchmarks. Okay, so the ministry's guidelines did update you'll see the difference on the screen there between 2025 and 2026. And then we showed a little percentage difference related to year-over-year comparison. So you'll see that the provider compensation went up quite significantly. That was the one that, we talked about with many agencies on the phone. Thank you very much for your time spent on this. And and then we did send some information to EDU saying that we felt that the 155 was understated, and they have increased it. I'd say to me, it's to represent almost another child in care. So they have increased that one quite significantly. Then there's a new home provider multiplier for new homes that open up in 2026, where that 205 is then multiplied by the 1.2. So that makes it even a little bit more like additional funding. However, that is only for new homes that open up in 2026. The visitor compensation did go down a little bit. We did put in a question to EDU related to why that benchmark went down. We're still waiting to hear back on specifically. And so once we receive some additional information, we'll bring that back into our Q1 discussion with you. But that one went down slightly. In some of the information that they shared with the entire sector, again, they ask LHCC, they ask all of you guys to report as of December 31st, all a bunch of information. And they said that they updated the benchmarks based on that information. So again, we'll wait to get exactly their response from them, but we are just seeking that clarification related to why it went down slightly. The other costs related to visitor compensation, that 5%, that remains the same. As you can see, the variable and the fixed benchmarks, they both went up by 2%. So to me, that is where the ministry, I guess, is in terms of inflation, right? Related to inflationary increases, they've more or less added 2% to agency operating costs. Okay, so now I'm going to talk a little bit about the next kind of change for 2026 or update in the funding formula for 2026. So the province requires that, so for those of you who receive legacy and growth top-ups, and the province does require that those be converted to what they're calling a rolling top-up in 2026. In order for us to calculate this, we'll be using your 2025 actual expenses. So, and once that we compare your actual expenses, that ratio or that calculation becomes permanent to you for each of your agency. And then that ratio is applied to your benchmarks every year so that you don't lose the benchmark increases. So one of the questions we got is, okay, so if the benchmark goes up, does that mean my legacy goes down? The answer is no, right? What this calculation is meant to do is maintain the percentage, like maintain the cost and the percentage while still reflecting the increases that the EDU has built into the benchmarks. In regards to the home provider benchmark and the 2%, it's even adding that to your cost, that 2% as well. So it's supposed to maintain it. So you don't lose legacy money when your benchmark goes up. In Q1, we're going to get into more specific details about how the rolling top-up is going to be calculated. We'll walk you through some examples, and then we'll take you through the timeline for implementation. But one thing we did want to just, again, we've been saying is, maximizing your allocation on attributable, appropriate, and reasonable expenses. That's been a common theme throughout the year. So we just want to highlight that if you're reconciled 2025 expenses, if they're less than your total allocation, then your rolling top up will be less than your top up amount. Because what that means is that you didn't spend all the money in your legacy top up. And therefore you might, like, the thought or the direction is that you don't need that funding if you didn't spend it in 2025. So I do want to pause there, because this one is going to be our new 2026 kind of implementation piece related to the funding formula. So we just wanted to explain kind of factually what it is, and then get into the calculations and the when and the how in Q1. But if you have any questions related to what this is, this will be the time to ask it at the Q&A session, or you can post it anytime, post questions in the chat. So, okay, so the last piece before we get into the workforce compensation funding is that overseeing piece, right? So essentially, the number or the dates changed quite significantly in our guidelines. So before, it was more or less wherever it was more kind of historical, or whoever approved you to open up the space, the home is who's funding you. Now, like I said, the ministry is looking to, I guess, streamline and provide give the overseeing service system manager all of the agency's funding, so that you kind of are just reporting to one municipality, right? And so for any homes, if we are your secondary service system manager, if you have homes that were created with us, but your overseeing is another jurisdiction, those homes will be funded through that other jurisdiction. If we are your overseeing, and let's say you opened a home in, I'm going to say Wellington County as an example, right? Then Peel will be funding you for those homes in Wellington County that opened up after December 31st, 2024. And then I don't know this, but I anticipate that this date is going to change every year, but it looks like the intent is, like I said, just to put all the funding under one municipality for each of the agencies to kind of streamline things. So with that, I'm going to pass it along to Amanda Lyle, who is a specialist on my team, who's going to be talking about the workforce compensation funding. So over to you, Amanda.
Thanks, Olivia. Good morning, everybody. So as Olivia mentioned, we're going to talk about the workforce compensation funding.
I don't hear Amanda.
Oh, no.
Everybody else hear Amanda?
Yep, we can hear.
I heard you earlier when you were trying to bail me out of my tech issues.
Oh, dear. Can anybody send me a thumbs up with the reaction if everybody in the group can hear? Okay, perfect.
We can hear you, Amanda.
Okay, awesome. Thank you so much. We have to love tech challenges at the end of the year. But as Olivia mentioned, I'm going to be walking you through our 2026 workforce compensation. A lot of the information that I'm going to share in the next slides will be kind of a review and just kind of providing some tweaks, but for the most part, it will be a review. So for our LHCC base funding, in 2026, basically you're going to have the same approach as you did in 2025 and 2024. So what that means is that you must follow your distribution approach that you established in 2024 for the LHCC base funding. So you must maintain wage and incremental benefit enhancements for your home visitors. And this includes your hourly wage enhancements paid through what we referred to previously as the staff wages and benefits, historical, and pay equity enhancements, if it was applicable for your home visitors. Similarly, you have to maintain the payment enhancements for your home providers. Home visitors and home providers supported in 2024 must not experience a decrease in their hourly wages or provider payments. And this applies to agencies that opened or enrolled in CWELCC before December 31st of 2024. If you enrolled after, you would not have received the LHCC base funding, so it would not have been included in your CWELCC program allocation calculations, so you do not have to provide these base funding wage or payment enhancements. And we'll go in to the next slide. So this slide talks about the wage enhancement grant and the home childcare enhancement grant and workforce compensation. So again, here, no major changes with either of these programs. In 2026, WEG will continue to support the up to $2 an hour wage enhancement for home visitors, and the maximum eligibility for WEG has increased to $33.81 per hour. For workforce compensation, or WCF, the annual increase is now up to $4 an hour for RECE home visitors, and the wage ceiling has increased to $31 an hour. The wage floor has also increased, and that's to $26.86 per hour. For your home providers, as a reminder for them to be eligible for the HCCEG, they must have at least one child enrolled to be eligible. But this program will continue to support up to $20 per day for home provider payment enhancements, and the maximum eligibility has increased to $338.10 per day. And with both of these, as a reminder, it for your CWELCC eligible children has been built into your program cost allocation, but you're still required to maintain these requirements. Okay. And so now we're going to move on to our WCF reminders. So in 2026, the workforce compensation amount has increased by $1 per hour to a total of $4 per hour. This is great news for the majority of the sector, but some home visitors may not receive this additional dollar because of the change in the LHCC base funding order of operations that was implemented in 2025. Even though EDU has made this change, they have also required that no home visitor receive less than they did in 2024, and this continues in 2026. So whether or not your staff receives the additional $1 increase will depend on their base wage and how much LHCC base funding they receive. The wage stability policy ensures that at a minimum, and this was introduced in 2025, so again, this is a reminder here, this wage stability policy ensures that at a minimum, staff should not receive a wage that is less than what they receive in 2024. You can use the 2026 staff wages planning tool to help you calculate the correct wage amounts for your home visitors. It will do the math for you and determine exactly what your home visitors should be receiving. And Selma will be giving a demonstration of that tool in just a little bit. On your pay stubs, you will still require to make some notations. Those notations remain the same for 2026 as they were in 2025. So that's where you'll require a note for the CWELCC WCF funding, the LHCC base funding, and WEG for your home visitors. Okay, so in that last slide, I talked about the order of operations. So this is what we're talking about when we talk about the order of operations. There's no change to this order of operations. It just, you now have to pay attention to the new WEG and HCCEG maximums, as well as the WCF annual increase. In previous years, the LHCC base funding was applied at the end of the wage order of operations. But as of January 1st of 2025, the ministry gave us the direction that the LHCC base funding must now be applied to the wage before any other wage enhancements, such as the WEG or the WCF. And again, this order of operations continues when you're assessing your eligibility for wage grants for your home visitors. So I'll just walk you through the order of operation. So first you would take your base wage. So this is what you provide as an employer provided base wage to your home visitors. This would include any employer-based wage improvements, such as any obligations that you might have from collective agreements, minimum wage increases, or if you've given any cost of living increases. And then to that base wage, that's when you would now apply the LHCC base funding, which includes the staff wages and benefits, historical pay, and pay equity that we talked about in previous slides. From there, you would add the WEG, which would be up to $2 an hour, up to the new maximum wage cap amount of $33.81 per hour. Next, we apply the CWELCC annual wage increases, which is the WCF. And again, this is now up to $4 per hour for 2026 for RECE home visitors if they earn below the wage ceiling. And the last element that we would apply is the wage floor. So this is the incremental amount that you would have to apply to make sure that your home visitor's hourly wage is at the wage floor amount. And with that, I will hand it over to Selma, who will walk you through an example of how this all comes together in the WCF staff wages planning tool.
Thanks, Amanda. I'm going to share my screen here. Hi, everyone. My name is Salma, and I am a senior program funding analyst at the region of Peel. And as Amanda mentioned, today I'll be walking you through the 2026 workforce compensation planning tool that we've created. The purpose of this tool is to help aid providers in determining the appropriate hourly wage for their home visitors in accordance with 2026. And please note, if you are an existing provider, you would have seen this tool in the prior year. As mentioned, there have been no major policy changes made. Simply, the tool has been updated for the new wage caps and ceilings in 2026. So with that, we will get started. The first tab we have open here is the instructions tab for your reference. And on this tab, you will find details on this type of home visitors who qualify for WCF with an overview of each column that you will be seeing on the next tab, along with instructions on what to input into each column if there are any inputs required. So please ensure to thoroughly read through this tab before moving on to the next tab, as it will definitely help with your inputs on the second tab. Moving on to the second tab, this is the planning tool itself. And similar to many of our other templates, you are required to provide inputs in all the green cells. And today we will be walking through two examples together. So let's get started. So for our first example, let's assume that we have a home visitor SD who is an RECE home child care visitor. We're going to assume that this home visitor and their estimated program hours worked for the period of January 1st to December 31st, 2026 is 1,500 hours. Moving on to column H, you're being asked to input what your home visitor was earning in hourly wage as of December 31st, 2024, making sure that you include all grants and enhancements and do not include the top-up amount. So in this case, we are going to assume that SD was earning $26.86 per hour, which is inclusive of all the grants and enhancements. Moving forward, column I is asking you to input what your home visitor was earning in hourly wage as of December 31st, 2025, before applying any grants and enhancements. So in this case, we're going to assume that they were earning the minimum wage of $17.60 an hour. And finally, in column J, you will enter in the amount of LHCC base funding, SWB, and any historical allocation, if applicable, for this home visitor. In this case, we're going to assume $2. So as you can see, we are now done with all the provider inputs, which are the green cells. As we move along the tool, you will notice that WEG is automatically calculated in column M, with each home visitor being eligible for up to $2 an hour if they are below the WEG cap of $33.81. Because the staff member is below the cap, an automatic $2 is calculated and applied for WEG, bringing their subtotal in column N to $21.60. Now, as mentioned, the 2026 wage increase is up to $4 an hour for each eligible home visitor. And because staff member or home visitor member SD is currently earning less than the wage ceiling of $31 an hour for an RECE home visitor, they are entitled to the full $4 of wage increase, bringing them to a subtotal of $25.60. Now, after the wage increase is applied, SD is now earning $25.60 an hour, which is still below the wage floor of $26.86 an hour for an RECE home visitor. Therefore, in column Q, they will receive an additional $1.26 for wage floor. Column R shows that their new subtotal is $26.86 an hour. Now, if you remember earlier, and if we scroll back to column H, you will notice that in December 31st, 2024, SD's hourly wage was $26.86 after all their grants and enhancements were applied. Going back to column S, wage stability, column S will calculate the difference between SD's 2024 hourly wage of $26.86 and the 2026 projected hourly wage of $26.86. Now, because their 2026 hourly wage is the same as the 2024 hourly wage, there is no additional wage stability amount calculated or required. Column T will calculate what each home visitor's final hourly wage should be in 2026, and it's simply taking the higher of column H, which again is the 2024 wage with enhancements, and column R, which is the 2026 rate with enhancements. In column U, we have included the home visitor cost projection should you want to anticipate your cost, excluding the benefit portion for the year. And lastly, we have included a pay stub reporting section in columns W, X, and Y to help facilitate an easier reporting. Now we're going to be moving on to our second example where wage stability comes into play. So let's assume we have person AB who is an RECE home child care visitor. In column G, we are going to once again estimate that their program hours worked from January 1st to December 31st, 2026 is 1,500 hours. In column H, we're asked to input what home visitor AB was earning an hourly wage as of December 31st, 2024, making sure we include all grants and enhancements. So let's assume this person was earning $31.50 an hour, which again is inclusive of all their grants and enhancements. Next, we're going to enter the base wage per hour as of December 31st, 2025, before applying any grants and enhancements. So in this case, let's assume that person AB was earning $22.50 an hour. And finally, we're going to enter in the LHCC base funding SWB plus hourly historical funding amount. And in this case, we're going to assume $3. Once again, the provider inputs are complete, and now we'll move forward with the tool. This home visitor AB is below the WEG cap of $33.81. Therefore, an automatic $2 is calculated and applied to the hourly rate, bringing them to a subtotal of $27.50 an hour. Now, once again, the wage increase for 2026 is up to $4 an hour for each eligible home visitor. Because AB is currently earning less than the wage ceiling of $31 an hour for an RECE home visitor, they will be entitled to $3.50 of wage increase, bringing their hourly subtotal to $31 an hour. After this wage increase is applied, AB is earning $31 an hour, which is above the wage floor of $26.86 an hour for an RECE home visitor. Therefore, in column Q, they will not be receiving any further amounts for wage floor. Now, moving forward, we see that AB's hourly wage in 2026 is $31 an hour. Now, if you remember previously, and if we scroll back to column H, you will see that as of December 31st, 2024, AB was earning an hourly wage of $31.50 after all their grants and enhancements were applied. So going back to our wage stability column, column S, this will calculate the difference between that 2024 hourly wage of $31.50 and the projected 2026 hourly wage of $31. Because the 2026 hourly wage is lower than the 2024 hourly wage, an additional 50 cents of wage stability will automatically be calculated and applied in column S, with column T showing the final wage in 2026 for AB being $31.50 an hour. This concludes our walkthrough, and I will now pass it back. Thank you.
Thank you, Selma. Hi, everyone. My name is Mark York, and I'm an advisor in the Child Care Policy and Funding Development team, and I'll be walking you through the rest of this presentation. We recognize that there's a lot of information to digest, so we want to ensure that everyone understands the actions required related to their funding, which is why we'll be hosting another teleconference in the new year to go into the information that was presented today and to respond to any of the questions that you may have. So what's next? So your 2026 funding allocation should be visible in GovGrants now, so please have a look. We really encourage that you stay on top of your operating budget throughout the year and make sure that you have your regular check-ins with your EYS to ensure that you remain on track financially. And don't forget about the updated 2026 staff wages tool. It's there to help you calculate staff wages with all the new 2026 and WCF floor and ceiling updates. Most of these resources and tools should have already hit your inbox as of yesterday evening. And if you haven't received them as of yet, feel free to reach out directly to your EYS and they should be able to sort everything out for you. In addition to that, we're working with our digital team to get everything posted on our website to ensure that you have easy access to the resources and tools. And other reminders in the new year will be, you'll be expected to complete the enrollment and workforce update task in GovGrants. And lastly, again, our next teleconference is scheduled for January 2026. And as always, if you have any questions before then, feel free to email your EYS or our email inbox at the Early Years and System Division inbox account that you see on the slide there. All right, we'll move on to our Q&A session.